Hello, welcome back, and in this video I show you how to use divergences as a leading indicator in your trading. So before we get into our charts, let's take a brief look at the basic definitions of divergences and what we are looking for. So the indicator, when we are looking for divergences, detects a change in the momentum before it becomes obvious in the price action. So in this case, the indicator that we are using is actually going to be a leading tool. A divergence can foreshadow a change in trend direction before it happens, so really important. And we're going to use trend structure analysis, so highs and lows and trend waves, to improve the setup quality of our divergences. And finally, you can use any momentum indicator, the RSI, the MACD, the stochastic, the CCI, or whatever, to define and to find divergences. So the most important thing is that when we are going to look for divergences is that we are looking for existing trends and very strong trends. Because the best divergences, they happen after very long and extended trends. So you can see the market was in a downward trend here, and then during this trend we are looking for divergences. And there have been two instances when the price action shows the divergences with the indicator. So here, for example, we have our first divergence. You can see the price made lower lows, but the indicator here, the MACD histogram, in this case showed you the higher lows. So this is a divergence because the indicator and the price action, they are diverging. They are not doing the same things. They're showing you two separate things. However, when we look at the price action, we can see that the market still made lower highs. So the trend structure was never broken here during this trending phase. And even though you have a divergence here on your indicator, the trend structure doesn't give you an entry signal. As long as the market keeps making lower highs, there is no trading opportunity. Then here at the bottom, we have another divergence. And this is not really, well, there's this concept of hidden divergences, but the divergence is not as obvious at first glance. So generally, you want to look for peaks and valleys on your MACD indicator. And here, when I move it, you can see we have one valley here, the peak to the downside. And then here is where the price makes another trend wave. And this trend wave, when the trend wave bottom happened, here is where you have your other peak, or the valley in this case. And although this is already here showing you a green MACD graph, it does qualify as a divergence because obviously this is much higher than this low here on the indicator. And you can see that here the price made lower lows and the MACD here is making higher lows. So just the same principle as applies here. We have a divergence with the indicator, we have a divergence with the price action, and then here actually we do have a change in the trend dynamics and in the trend structure. So here the market then started making higher highs as well. So not only did we have higher lows, we also broke into a new higher high, and this is where the trend change started. And this is how then you actually get into trades. You could use then this breakout off or into a new higher high to time your trades with a breakout entry, for example. You could also use another moving average, for example, layer maybe a 30-period moving average on your chart. Let's see, this is a 50, but if you use a 30, this should give you a little bit earlier signals, obviously, because of the lower setting. Let's change it to the regular high-low close divided by 3. And you can see that the moving average also coincided with this break of the previous high structure, and then you see that the price is taking off. Here, a very classic example on the US dollar Swissy. Before we had a 1-hour chart, now we're having a 4-hour chart, and you can use divergences across all indicators, obviously. And we have a very strong trend here. You can see the market rallied all the way, and then here, as the market moved into the top, can see the price still making higher highs, and the indicator warned you with the divergence. And this is really what the indicator does, or the divergence does. It is a warning signal that although the price action still shows you higher highs and higher lows, the indicator is confirming that the momentum is losing strength. And then here you may already have some type of channel, for example, and then you can see as soon as the channel is broken, then the new downtrend unfolded, and with a very, very strong turnaround. So strong divergences after strong trending phases can be great trading signals. As I said in the beginning, divergences on their own are not strong enough, so you need to add other layers, other confluence factors to your divergences. They can be moving average breakouts, they can be a change in the high-low structure. So whenever you see that the market goes from higher highs and higher lows to then here making lower lows and lower highs, you could use this as a breakout to time your breakouts. For example, here, once the market actually made its first, let me get this off, once the market made its first lower low here on the breakout, this could have been one trigger, or even here the pullback into the previous low structure could have been also another entry trigger point. Here we have a classic great example of a divergence. So here you can see, when we look at the price chart, here is where your MACD topped out. So we have a high point on your MACD. And then on the next swing point of your MACD, you can see that here, this is the swing point here. And when we connect those two, oops, not the third one, when we delete this, when we connect the two high points on your MACD and we look at the high points on your price chart, we can clearly see a very, very strong divergence. So this is a great, this is a great setup, and this is a great divergence. And it tells us again that the trend is losing strength, although the market is making a higher high in the price action. When we analyze the candle structure and momentum, the price action is not as strong. And then you could draw your horizontal level, for example. You can use a 30 period or even a 20 period moving average. 30 period is usually a good number for earlier trade entries and closer to the top. And you can see here the breakout into a new low happened with the breakout of this structure and with the breakout of the moving average. And then afterwards, the market really sold off very, very strongly. Here we have a recent great example of another divergence. And you can see when we connect here the swing lows on the price action. So we have the first swing low here. This is on the MACD, the point. Then we have another swing point here on the price action. This is our point here on the MACD. And then here at the bottom, we have this final swing low point. And I connected it. Let's zoom in a bit. So you can see the market was in a very, very strong downtrend here, which has been going on for a long time. So it does make sense to look for divergences. And you can see here, we have the high here, we have a lower high, and then here, if we connect this valley, we have an even lower high or lower low in this case on your MACD. So very, very strong divergence. And you can draw also, let's get rid of the vertical lines first. And then here you can see you could use a horizontal support and resistance. Here seems to be a very strong level. Previous support became resistance. And then here on the breakout, this is where the new trend really got initiated and when the new trend really started. So the divergence and the breakout especially helps you to avoid picking tops and bottoms. So when you look for an actual change in price structure and trend structure by waiting for the market to make a higher high point here, or even using a moving average, you're automatically not entering at the very, very bottom, which is important. Many amateur traders always make the mistake that they want to get in at the lowest point possible, and this is often a recipe for disaster. It is okay to enter a little bit later. You can see that as your insurance for your trading. You don't need to be the first one in the market. What you want is to have extra confirmation, to have extra information, and then your trade quality will improve significantly. Here, another great example. So the market was in a strong downtrend here first. And during this downtrend, we had two divergences. The first divergence happened here during this trending phase. You can see when we connect the lows, the price made lower lows. And then here also lower lows. And divergence as well showed you higher lows. So clearly there was a strong divergence in the market. And the market never really sold off. Depending on how you draw your trend structure analysis, you may have gotten in or you may have not gotten in, but it doesn't matter. Nothing works 100%, and you need to cut your losses, and then you need to move on. And then your second chance came again here at the bottom of this trend, we have a very, very strong divergence, even a double divergence. So you have your first divergence in here, and then you have another divergence in here. And then afterwards, we have a very, very clear support and resistance area, very nice breakout then into the new highs. And then the market really started to trend very, very strongly. So again, we are not going to pick the absolute top. We are not going to pick the absolute bottom when we are using divergences with those trend structure breakouts. But we have extra confirmation. We have great confidence in our trades, and we have a lot going on, or we have put the odds in our favor. And this is how you use divergences. Again, you can use it across all the time frames. You could use the RSI, you could use the stochastic indicator as well. And it is very, very important that you don't use divergences just on their own. They are not strong enough signals to just use them on their own, but use it in combination with other confluence factors, with other technical tools, with other indicators, and then you can improve the setup quality and find much, much better trades. Let me know how you like this video. Do you want to learn more about indicators or price action or whatever topic you would like me to talk about next? Leave it in the comments below. I look forward to hearing from you, and happy trading.